When you look at the performance of the hydrogen stocks of the last few years, you typically see a long flat line until 2020, then a big rally, a peak in February 2021, and then a giant sell-off over the last 6 or 7 weeks. Most of these stocks losing 40 or 50% of their value. So the question is, was that it? Or do we have more to come? Do these stocks have more in them than what we have seen over the last 6 or 7 months? So today I want to go over the leaders in the hydrogen industry, over the pure plays on hydrogen, and discuss the investment opportunity. The thing about hydrogen is that hydrogen is not new. Hydrogen production has been here forever, with typical old industrial companies usually producing it in a not very clean way. What is new is this whole set of companies that are now focused on producing clean hydrogen and helping us transition into powering ourselves in a much more clean way, right? Whether it's buses, cars, trains, planes, households, or factories. So just a few headlines. Recently, the Financial Times published an article talking about hydrogen-powered planes that Airbus is working on. China made a commitment to be completely carbon neutral by 2050, just like many other countries around the world. And governments in every single country are supporting this whole transition into the clean energy space, right? So this whole transformation is not going to happen on its own, and it's not going to be just electricity. It's going to be hydrogen as well, because the TAM, the total addressable market, is absolutely huge. So the way I think about hydrogen, the production of clean hydrogen, is the way I think we all should have thought about Tesla 10 years ago. When you think about Tesla, they spent the best part of the last 10 years trying not to go bankrupt, as they effectively single-handedly drag the whole car industry into the future, kicking and screaming. But when you think about what cars will be on the roads 10 to 15 years from now, it's mostly going to be cars powered by electricity or hydrogen. So the question mark, obviously, is a lot of these companies focused on clean energy production when it comes to hydrogen have really high valuations, despite the pullback over the last several weeks. So let's talk about it. Before we get to the hydrogen stocks I want to talk about, let's do a 60-second hydrogen chemistry class, just to avoid any confusion about what we're actually talking about here. Because very often people talk about these different colors of hydrogen, this hydrogen rainbow. The first type of hydrogen is gray hydrogen, which is 95% of hydrogen produced today. It's produced using something called steam reforming, effectively using natural gas to produce hydrogen, and the byproduct is CO2, carbon dioxide that's emitted into the atmosphere, which is obviously polluting. So that's gray hydrogen. Then blue hydrogen is using the same process, but you're capturing up to 90% of those CO2 emissions, and use it for something else, or you store it underground. So that's blue hydrogen. And then finally you have green hydrogen. Green hydrogen is effectively the investment opportunity here, because you're producing hydrogen using renewable energy, renewable electricity from sources like solar or wind, and a process called electrolysis, where effectively using water to produce hydrogen from water using electricity. So you might remember these experiments we did in high school to produce hydrogen using electrolysis. The first company I want to talk about is Bloom Energy, ticker BE, trading at $25 a share. Now, this is a company that at this point is $4.5 billion market cap, so this is not a small company. But they produce Bloom Energy servers, which are effectively stationary power systems meant as backup power. Now, think about clean burning generators, the size of a parking spot, which weigh 20,000 pounds and cost $800,000, and they are generating enough power to power 160 homes or a full office building. They use something that's called solid oxide fuel cell technology, which effectively turns natural gas and hydrogen into electricity as efficiently as gas turbines, but in a smaller, cleaner, configurable type of a module that can be placed anywhere. Now, when you think about the opportunity, the total addressable market here, so Bloom Energy should be on par or competitive with the grid. So when you think about, over the next 10 years, this is a total addressable market of $150 billion. And when you think about the growth drivers, now this is a company that already has a huge amount of Fortune 1000 customers, a deep international penetration with a huge growth and backlog behind them. So the question is, should you be buying the stock here at $25, right? When you think about what the stock did over the last 6 months, it peaked at 45, now it's at 25. So it's still relatively richly valued, compared to where it IPO'd, obviously. But this company has a huge amount of opportunity in front of it, a huge addressable market, a lot of backlog, international penetration, and if you can get it somewhere in the low 20s or below 20, this is a company that in the long run is going to power much higher. The second company I want to talk about is Plug Power, ticker PLUG, and I'm sure you've heard about this company because really they kind of reminded me of Tesla 10 years ago. They have a huge first mover advantage. At this point, they have a sufficient critical size. They are valued at $17 billion as a market cap. But effectively, they are building a nationwide network of green hydrogen production and fueling systems, right? So they have a ton of capital, using it to build and have this first mover advantage and really take advantage of this, transformation to electrification of transportation and this whole pivot to hydrogen. Now, JP Morgan has a target of $61 per share on this. And if you remember earlier this year, the stock was trading as high as $75. So now it's back to 34. Recently, they made headlines because they announced that they are restating some of their accounts. So the stock took a little bit of a dip, but not too much. And again, if you can get it in the low 30s or below 30 as this whole consolidation of the renewable theme plays out, I think this is a stock that's going to do very well because again, they will have that scale and the first mover advantage that is going to trounce the rest of the market. The next company I want to talk about is Fuel Cell Energy, ticker FCEL. $4.2 billion market cap. Again, this is not a small company either. It's very similar to the first company I talked about, Bloom Energy. They produce power plants based on stationary fuel cells. Now, the difference with this company is that the technology, the manufacturing is based on carbonate fuel cells, which can operate at much higher temperature with greater efficiency than the phosphoric acid fuel cells. Now, that's a bit of chemistry again, but effectively they have better technology than a lot of the other competitors in this space. Now, this company has 95 US and 150 international patents. So again, this is a first mover advantage in a new technology where the company is creating this gap from all the others behind them. Again, this reminds me again of Tesla and what Tesla was, 5, 7, 10 years ago when they were creating this huge gap in a new industry. So when it comes to the valuation, right? So this stock now trades at $13. It was at the high of $30. Back in early 2021. So again, this is more than a 50% correction. JP Morgan actually has a more of a neutral rating on this company. But again, if you can get it in the single digits, if you see another pullback of another, 10, 15, 20%, and you get it in the single digits, somewhere between $7 and $10, again, this is a company that's going to do very well in the years to come. And the last stock I want to talk about, of course, is going to be Nikola. Now, I was actually very negative on Nikola throughout most of 2020 because, from the moment they IPO'd, the climb to $94 a share, overtaking Ford in terms of valuations, then, the whole saga of Trevor Milton all over social media, I really focused on being a billionaire on paper rather than delivering on the strategy and delivering results. The whole GM partnership that fell apart, Hindenburg publishing that report and the slide, lower and lower and lower throughout most of the second half of 2020. But again, I'm taking a second look at Nikola because of several reasons. First of all, they now finally have a management that's really focused on delivering on results. If you look at the results of Q4 and the guidance for 2021, it's actually pretty good. They delivered on the Coolidge facility. The truck is coming. We'll have deliveries in Q4 2021. So that's really only a few months away. So, you could argue a lot of this is already priced in the stock, and arguably the stock has suffered in tandem with the rest of the renewables, hydrogen theme. A lot of air has been taken out of this stock, out of these stocks. But again, when you think about the opportunity, the first mover advantage, the name recognition, the amount of capital they have to, deliver on the strategy and the plans they have. Again, a lot of this hinders on successful execution, but they should be a company that should be moving from, pre-revenue, which is what it is today, to a company that's, that has $10 billion in revenue throughout, over the next 10 years as they really catch up with the plans and the strategy. So again, Nikola is a company that I think we should focus on. It's at $14 a share today. Again, if you can get it in single, low digit teens or just below 10, if it gets there, I think this is a company that we should all start building a position in because again, it makes me think back to Tesla. If you looked at Tesla in 2010, 2012, 2014, just short of bankruptcy, not really sure where this was heading. I'm thinking, all the missteps that Nikola has had, there's really a parallel there. All right, so that's it. A quick overview on hydrogen chemistry lesson, a few stocks in the hydrogen space that I think we should all pay attention to, that I think are the future of, where the energy industry and the way we kind of power ourselves or transport ourselves is really going. I mean, this is certainly a theme that's close to my heart. I think when we look back at this 20 years ago, we'll kind of wonder, why did we not buy more of these stocks? And look, when it comes to the valuations, right, it's very hard to value pre-revenue companies. You kind of effectively trying to apply some kind of a multiple to future revenues or future earnings in 2025 or 2027, and then discounting those back using some kind of a cost of equity or cost of weighted average cost of capital to arrive at some kind of a valuation. So a lot of the times it's a guesswork, right? You're kind of thinking, do I believe in this topic, in this theme, in this, in this future as an investment for me and for my family or not? So, I always compare this to, investing in Apple 25 or 30 years ago, or investing in Tesla 10, 12 years ago. So sometimes it's a matter of belief. Obviously, do your research, pick your levels, wisely. Don't put your whole portfolio in this space. But I think a lot of these stocks have pulled back sufficiently now that if we see them, correct another 15, 20%, it's worth picking them up and putting them in your portfolio. Anyway, leave me a comment. I'd be interested to know what you're thinking about the hydrogen space, about these stocks specifically. If you're invested in these stocks, if you're holding them, so let me know what you're thinking. Make sure you like the video if you enjoy this conversation, subscribe to the channel if you haven't yet, and I'll see you in a few days.